was asking if you were saying we're good.
All right.
All
Okay.
right.
Have a good.
Cool.
See
Thanks,
you
guys.
guys.
See you, Elizabeth.
See ya. All right, everyone. Welcome. We are live, and today is Tuesday, the 4th day of what we are going to be calling Aligned August 2026. I hope you guys are all doing well. Before we get started, I have to show this cartoon again. Bear splaying to me harder. We are not in a bear market, guys. We are in a bull market. And that's what happens when you correct through time and price. We've now had two double-digit pullbacks in the Nasdaq this year. So this begs the question, like, how much more are we going to have in terms of volatility already again this year? I mean, we did have a couple of volatile episodes already. Granted, the VIX didn't really explode higher this time around, but that's okay. When the clock runs out, it's all systems go, the system resets, and you see what happens. Basically, it's whenever Ken Griffin loves to steal the books of his competitors, that's usually around the time when you get those lows. So a lot of things have happened. I was live yesterday with Elizabeth. Great session. But I've been saving a few items that I wanted to talk to you about today. So first and foremost, given what we saw play out last week, I think that Scott Bessent is the most consequential Treasury Secretary since Alexander Hamilton. Um, Simply put, guys, I'd say Scott Bessent's smarter than 99% of market participants. And so I don't think it's a good idea to bet against him, okay? He is unusual in the sense that the guy actually managed money. The guy worked with Soros. I know Soros is a big boogeyman, in the trading world for, market manipulation and crashing currencies and whatnot. I've seen the reports, guys, I know. But Scott Bessent is the real deal, okay? Scott Bessent understands the market. Scott Bessent understands that we are no longer in that multi-decade period of falling rates. Scott Bessent understands that the dollar and crude oil are positively correlated and by extension, inversely correlated to bonds. Okay. Scott Bessent understands that you talk down the dollar, crude oil is going to follow and bonds are going to bid. So that's where we are, guys. And remember, it's not about interest rates. It's about the yield curve. Remember that the most bearish chart that we were talking about a couple weeks ago leading into the volatility that we experienced? We were looking at credit spreads. Well, we're going to take a look at it again today because it is turning higher. Spreads are narrowing. Liquidity conditions are improving. It doesn't matter how it happens, as if it doesn't count just because, we sold euros and bought yen. Now we're giving Japan access to the repo facility, the Fed's repo facility. So what does it not count? Oh, we're higher, but it doesn't count because of this. No, guys, that's not how the markets work. Okay? That's not how the markets work. And so now I am daring you, I am begging you, please call me insane. I love it. I relish it. What if oil went to 45.55? What if oil went to 45, $55 a barrel? Okay. There's so much fake reports out there. I have no idea if the army's running low on missiles. And the people reporting on it, they don't either. They just will say anything. I have no idea what's going on with the negotiations between the US and Iran, and I don't actually care. I don't actually care. Because the market knows the truth. The market prices it in. No one's going to take a trade on something that they don't believe in, right? Oh, I think oil's going to go up, so I'm going to sell short. I don't think so. I don't think so. So again, whether or not you look at the yield curve, whether or not you look at credit spreads, the yield curve has been steepening. Everyone was freaking out because Warsh was a hawk last week, okay? But they missed the very easily observable phenomenon of the yield curve steepening, meaning long-term rates went up more than short-term rates. Now bonds are bidding, so the curve's flattening once again. And I don't think the Fed's going to I don't think they're going to lower rates anytime soon unless crude oil collapses down to $45, $55 a barrel. And you know what, guys? Wouldn't that be peak irony? Wouldn't that piss people off the most? I often find myself asking this question in trading. What What would the market have to do to piss off the largest amount of people? And you need to be asking that question. I was even saying this yesterday when I was live with Elizabeth. Like, in trading, it's not even about having the right answers. I think it's more about asking the right questions. Okay, just don't get all Socratic about it. Meaning, you don't want to get killed for asking too many questions. But you know, that's where we are, guys. So we're in a bull market. The S&P just hit a new all-time high. The Dow just hit a new all-time high. Technology is exploding higher. Now, the silver lining, I'm not just a blind bull. I'm not a blind bear. Okay. It's actually crazy. I've been bearish for like a total of 6 weeks this year already. And here's a little fun fact, by the way. We have 7 monthly closes. Okay. This calendar year so far. The Nasdaq has been down 4 of the 7 months of the year. Isn't that a crazy thing to say? I mean, how would you feel about that? I mean, what is your first impression when I share that the Nasdaq has been down 4 of the 7 months this year, and we're still within, you know, launching distance of a new all-time high. So on that note, the final bullish confirmation factor that we need to see for this rally to continue, which I think it's going to, probably for the entirety of August. We need to see the Nasdaq hit a new all-time high ASAP, as soon as possible. The longer that the Nasdaq goes without making a new all-time high, the bigger of an issue it becomes. It's still early. We're in the first week of this new cycle. Okay, but you see the power of time. If you're just analyzing the y-axis, if you're just analyzing price, you're missing half the picture. That's even more important if you're an options trader. Okay, and that quite literally factors into the pricing, the value of your option. Okay, so that's what I'm looking at now. And I've also been seeing some seasonal bearishness factors. People saying, "Oh, August and September, it's bearish typically." Okay, guys. Well, guess what? July was usually bullish, and it was not bullish. I mean, the S&P didn't close higher in the month of July. Okay, so okay, Brian. Yeah, Henry Morgenthau. Fine, if you want to go there. Yeah, he was pretty important too. Henry Morgenthau. I haven't heard that name in a while. You know your history, Brian. That's good. Anyway, so let's go ahead and get into the charts to see who's all in the chat. Appreciate you guys joining me. I'm going to be with you until the bottom of the next hour. So who do we have? We have John. We have Stephanie. Asian Trader. Thank you for joining. Tim. Rio. Why would oil go down that low? Honestly, Rio, I don't have a true fundamental reason behind that. You want to call it market manipulation? I don't know. Um, but sometimes, when you have those big spikes in commodity prices, people overshoot on the upside, and then the unwind can be rather vicious. So we'll take a look. We'll look at the charts, why I think that is a possibility. But if anything, that would open the pathway for bonds to rally into next year, which not a lot of people are expecting is even a possibility. Long term, we are in a bear market in bonds. So, I know I've been saying, hey, we're looking for a low in bonds, looking for a low in bonds. I mean, this week you're rallying so far. It's only Tuesday, but I've been largely incorrect about that. But I still am looking for that low, because when you are in the broader macroeconomic inflationary environment, okay, stocks and bonds are largely positively correlated. They move in the same direction. When inflation accelerates, that's why we've been seeing every time crude oil starts to rally hard, you get volatility creep higher. Okay. Stocks are your best hedge against inflation in the long run, as long as inflation is not accelerating. If inflation is accelerating higher, going from 2 to 3%, going from 3 to 5%, going from 5% to 10%, you don't want to own stocks. You don't want to own bonds. You want to own commodities. If inflation is still present, you're going from 10% to 8%, from 8% to 5%, 5% to 3%. You want to own stocks. You don't want to own commodities. And in those cases, there's a place for bonds. I'm more, in the keeping the duration nice and short via T-bills. You're going to own long-term bonds. You're going to own duration. It's not for holding to maturity. It's for trading purposes only. Okay. Credit leads, bonds lead. And guess what? Currencies lead credit. Why do you think Scott Bessent wrote on his notepad, we want to buy, what was it, $10 billion in Japanese yen, and they ended up selling euros to do that? The guy knows what he's doing. Okay. This isn't Janet Yellen or Janet Yellen. I always did that on purpose. Did it on purpose. But anyways, so you can see here we've had this big sell-off in the dollar yen. Now, interestingly, you are getting to a period where you are due for a bottom in this. Okay. You are due for a bottom in this. Ken, Mari, Tal, Denver David, Massimo, Frankie, Bon Martedi, Tashore, Sam. Glad you guys are here. So in the next few weeks, honestly, by the end of the month, I'm looking for an important low in the dollar yen. This could easily be construed as a bear flag. This would be the flagpole, and now you'd be looking for this to go sideways for 2 to 6 weeks. So you might see the dollar yen come back down to 152, 153 area. If you do, that's probably the opportunity to get long. I'm not really in a rush, and I'm not trying to trade against, the Treasury Department or the Bank of Japan. At the moment, we know what their objectives are. The euro is up against the dollar. Okay, and so the dollar being soft, that is tailwind for the international equity markets outperforming. Okay, euro against the yen, that one blew up as well. You did fall to its lowest level since November and December of last year. The big picture, guys, let me adjust this. You're still just consolidating, right? You're still consolidating. So this is just morphing into a larger, rectangle formation. Okay. And so we'll see if you can break below this. There are some very long-term cycles in the dollar yen that I have been tracking. And if that does play out, you could see this drop to 142. But at that point, I think we'll be entering the period. We'll be starting the move that ultimately leads to control being lost. At some point, we're not going to be able to defend the yen. Okay. But we're not there yet. There's a reason for the season. We're not at that season yet. Speaking of seasons, I have to admit, I am so pleased. I am so satisfied. I harvested the best watermelons that I've ever grown. 3 big, beautiful watermelons yesterday. I mean, I cannot wait to take a bite out of those. I'm very pleased. Watermelons are really tough to grow. They're not very fruitful. So it's always kind of been like a little experimentation specialty crop that I've dabbled in. And I've gotten some before that were like, red on the inside, but they're heavy feeders, right? So you need to really feed them. They need to be in good soil. And I mean, wow, I am so happy with those watermelon that I just harvested. And I got a couple more on the vine that are growing. Um, and I think what happened last year, I grew them, they got big, but I think they cross-pollinated with like pumpkins and I think it was pumpkins. And I actually wonder, I don't know if it's the case or not, but I'm wondering if like the way you get a cantaloupe is by crossing a pumpkin and a watermelon. I don't know. Because I could have swore I planted watermelon and when I cut it, it was like cantaloupe. I don't know. But these were actual watermelons. So I am very, very excited to say the least. So this is what's going on in currencies, guys. I just had to drop my watermelon news for you. Bonds are bid. Bonds are bid. So interestingly, you zoom out and you look at, because remember, what was your homework over the weekend, guys? Did you do your homework? Did you do your homework this weekend? You were supposed to review the monthly charts. If you reviewed the monthly charts, you would have seen that 30-year bonds actually closed at their lowest level during this bear market. They didn't make a new intraday low beneath the lows of October 2023, but they did make a new closing low. So naturally, that is a logical area for prices to bounce. Now, when we talk about prices bouncing, how high could we get? I don't know. If ZB spent the next, 6 to 12 months rallying up to 120 or 121, let's say 120, 122, that's probably the best case scenario. That's probably the best case scenario. Okay. So I'm not exactly like, hey guys, let's go out and buy bonds and hold them. That's not what I'm saying. Okay. You have to think about this stuff in terms of time. So you're seeing long-term treasuries outperform to the upside today. That's a good sign. We're seeing major relief. Yeah, Tim, that's exactly right. That's why Scott had to take action because of that. That's why they had to talk. That's why they had to go out and buy the yen. Okay. Because it's all connected. It's all connected. Credit spreads narrowing significantly so far this week. It's early, but we were looking at this last week and I said, hey guys, we're in the area. If this is going to reverse and we're going to see improvement in the bond markets, okay, this is the area for it to flip. And so far, so good. Okay. It's not just about the rate itself. It's about differences in interest rates between different types of bonds, right? Because the bond market's huge. It's not just government debt, guys. Apple's got debt. Google's got debt. Amazon's got debt. And guess what? When governments finally go broke, when they finally say, hey, when the market says, we're not lending you money, the only way you're going to get money is from central banks, you might actually see corporate bonds command a premium. But then again, this is why that's kind of a pipe dream because, even during the COVID crash, after the COVID crash, the Fed went out and bought corporate debt. They actually went out and bought private company debt. People forget that. And you actually look at the history of the Fed, you go back to their original structure, right? It was more of a central clearinghouse. And they weren't actually buying government loans. That was a wartime decree. I think it was Rahm Emanuel that said, never let a good crisis go to waste. Okay. But the Fed's original intention was to buy short-term corporate paper. Corporate paper is the private sector's equivalent of treasury bills. Okay. So that's what they used to do. So there is precedent to this. There is precedence to this. So we're seeing relief on the Fed front. Not to mention, the yield curve is nowhere near inverted, guys. We had an inverted yield curve from 2022 to 2024. I don't care what anyone says. I know I'm a heretic. I know I'm wrong thinking. I know, the thought police is going to come after me. We had a recession in 2022. Okay. We had 2 negative quarters of GDP, but we're not in an inverted yield curve environment. Okay. And so I'm not looking for the economy to contract. I'm not looking for a bear market until that happens. Now, if you do see long-term bonds rally into next year and the Fed does not move, maybe that does create a yield curve inversion. I'm thinking out loud. These are the types of scenarios that you need to be entertaining in your mind if you want to understand what the hell is going on in this world. Because guess what, guys? The news isn't cutting it. The news isn't doing it. The cost associated with believing the news has never been higher, especially if you are in the business of trading. Okay? It's never been higher. They have no idea what the hell they're talking about at best. At worst, they're acting as, signals for exit liquidity. I don't know if I want to put it on my tinfoil hat, maybe I'll say that, but I don't know. I don't have a concrete answer. And honestly, when I was younger, I used to spend more time oh, how is it really? How is it really? But is that helping you or me make money in this market? No, it's not. It's not. Okay. Japan's use of Fed repo may ease pressure on the Treasury market. Treasury Secretary Scott Bessent supports Japan's use of the Foreign and International Monetary Authority's repo facility to boost the yen, which helps protect the U.S. bond market. The facility allows overseas central banks to use their Treasury holdings as collateral to access dollars rather than selling bonds on the open market. Japan's use of the facility would be preferable for the U.S. as it would allow Japan to boost yen demand without having to sell treasuries outright, limiting the impact on the U.S. Treasury market. What would we do without Scott Bessent, guys? Okay. Correct, Terry. If bond prices go up, yields go down. Okay. So that's what, yeah, I tell you guys, forget about Trump. It's not taco. It's not, the Iran situation. You want the signals, you got to look at Bessent. Okay? It's just the way it is. Just the way it is. So let's go ahead and jump back and see what's going on in crude oil. Crude oil getting crushed again. Bessent was out this morning, say they may have another deal with Iran. Do I know? Do I care? No. No. I mean, I care to the extent that, like, I don't think we should get involved in another war. But hey, that's not for me to decide, guys. That's not for me to decide. You got that big lower high here, a couple gaps down lower, over the last week or so. And there are some questions circulating in terms of, was this the big cyclical bottom that we should be paying attention to, or was it this one? Either way, I am fully expecting this low from the end of June to be taken out to the downside. So that would mean oil prices at least at 65. But hey, what the hell? Why stop there? Let's go down to 45.55. Why am I saying 45.55? Well, I mean, you do have the lower monthly Bollinger Band down here. I don't think it's going to happen next week. I don't think it's going to happen next month. But what if oil prices fell into next summer? What if oil prices were contained until then? Okay. I don't know if it has to do with the Strait of Hormuz. I don't know, guys. We don't know. I try not to waste time and energy investing in things that I can't quantify the actual payoff. Okay. So what if oil does this and then explodes higher? Then I do think oil prices would explode, right? But we've kind of seen this story play out. Let's not forget, guys, we never even took out that high from 2022. That was a lower high in crude oil. The trend, I mean, I do think we're kind of in a long-term bull market in oil. Okay. 2020 was a generational historic low. Okay. Do we come back down to test it here? Do we form the right shoulder of a bigger head and shoulders formation? Do you see this kind of playing out? I'm going to draw this for you so you can see it. So there would be the neckline, around 120. And then you'd have the left shoulder. Okay. And then you would have the head. Okay. And then do we come back down to form the right shoulder over the next 6 to 12 months? Okay. In time, I'm in the inflation camp. I'm in the inflation camp. But there's waves to this stuff. These things follow seasons. There's a clock involved. Okay? Every market has its own vibration. Every market has its own time schedule that it's on. Okay? When stocks are in summer, crude oil's often in winter. If things start to get crazy when, winter's in spring and stocks are in autumn. If oil prices go down, wouldn't interest rates probably also go down? Yes, Terry. Yep, 100%. So that's what I'm looking at as a potential way forward. I know it's not popular, but I don't do this to be popular, guys. I do this honestly to make money because I do think this is the best way to make money in this day and age. What do you want to, go get a job and then inflation goes up 10% and your paycheck, your raise goes up 3%? No thanks. No thanks. I'm just grateful that I, kind of realized that was going to be happening early enough to get in the game, at a good time. So that's what's happening in energy. Let's take a look at, wow, this market. This market. Yeah, I think the S&P, I think we're going to 8,000 at least. I mean, these are some mean, big green mean candlesticks. Big green mean candlesticks. This is really, I mean, we haven't seen these types of moves. And what was I telling you? I was here saying we are setting up for the best buying opportunity since March and April. And here we are a week later at new all-time highs. And it doesn't always play out this way. And I told you last week I got whipsawed at the low. I went long Tuesday, got stopped out Wednesday. I bought back Thursday because that's what the model said to do. That's what the model said to do. And here we are. You think the S&P is going to 20,000? Alex, I would love that. I don't know. Probably not this year, but I'd like to see maybe the S&P at 13,000, 14,000 before this really comes crashing down. I think we're going to go along the lines of South Korea. I think we're going to go along the lines of Japan. And Just wait until China starts running, guys. China hasn't even taken out its all-time high since 2008. You have to understand this is a global market. European stocks are just breaking out of 25-year bases. European stocks, okay, a lot of them haven't even, they're just now in the last like several months just broke out from their highs from 2008. Do you realize that? Like that doesn't just happen and you come crashing down. Usually you rally higher, everyone says, "Oh, it's a new normal. It's great, everything's awesome. The old rules don't apply." Then the high forms. Then the high forms. I mean, this is just absolutely spectacular. What a move. What a move that we have here. I mean, it's just straight bid. This is the price action that you see coming out of cyclical bottoms. Okay? When time and price square, when time and price align, that is when you get the best risk reward opportunities. You want to talk asymmetric bets. You want to talk about minimizing your risk, maximizing reward. They happen at cycle turning points because everyone freaks out. Everyone says, "Oh, the end is near. Oh, we're about to start a bear market. Oh, this and that." We had a double-digit correction for the second time, okay, in basically 6 months in the Nasdaq. I mean, I don't know if you want to measure it from October or or January. It doesn't really matter. But the Nasdaq dropped 14-15% into that low in March, and then it dropped 11% from that high in June to that low at the end of July. We've had two double-digit corrections in a matter of months, guys. This is unusual. You don't usually get this. This is a very volatile market. So this is the big question. Are we going to experience a low volatility regime for the rest of the year? I don't know. I don't know. In fact, I wouldn't mind seeing some fireworks come late November into December. That's what I'm looking for. But again, what I'm looking for, what the market does, it doesn't really matter, right? Market's going to do what the market's going to do. Okay? So, no, this is exactly what we wanted to see. Okay? So again, here you can see, well, this is the Nasdaq 100, but the Nasdaq composite, let me just double check my fact that I dropped earlier. Yes, so the Nasdaq composite, so the Nasdaq 100 is the top 100 stocks in the Nasdaq. The Nasdaq composite has only been higher in 3 of the 7 months this year. January was barely higher. February and March were lower. April was up. May was up. June was lower. July was lower. And now we've erased almost all of the losses from July in a matter of days. In a matter of days. Okay. What'll happen tomorrow when the whole new agreement with Iran is nothing more than the next lie and bombing continues? I don't know, Alex. Who knows? Maybe you give back 400 points in the Nasdaq, and then we have a new peace deal by Friday. That's what I'm like. I'm begging you to just don't, not you, just like you all. It doesn't matter. It doesn't matter for your actual trading, for your actual decision making. It matters for your real life. Okay, but this is not really real life, guys. This is a big old game. It's a big old joke. It's you gotta have fun. Back when I used to play when I played soccer, I always remember, like, I was young. I didn't really have the best guidance. I still played at a high level, and I'm not really a fan of what the sport has become. But I've gotten more into like solo sports as I've gotten older. But mindset, I can't stress this enough. Like whenever I played to have fun, whenever I wasn't taking it so seriously, I did better. And it's kind of the same thing with trading. Like, just find a rhythm, vibe. Oh, I got a loss, no big deal. I know I have an edge. I got a system. I just need a couple of trades and I'll be back. This is a marathon, not a sprint. Okay, you might lose a battle or two. Your opponent might win, but this is a war, guys. I'm in this for the long haul. I'm in this for the lifestyle. Instead of being like, oh, every day it's so serious. Like I can only have so much caffeine. I need to have so much water. I need to go walk outside for 15 minutes exactly at 12:30 p.m. Eastern. And I'm exaggerating, but like, it's okay, guys. Just relax, relax. My wife loves when I tell her to relax. No, actually, she's a champ. Uh, VIX, VIX hasn't been has not like been absolutely crushed. I just think it's a matter of time. VIX cash is higher today, interestingly. But I do think it's because, people are probably hedging this move to the upside a little bit. But Mag 7, Mag 10 stocks just absolutely exploding higher. That's what you wanted to see. Mag 10 index looks ready for new all-time highs. This includes Palantir. Mag 7 does not. That's why. I was long Palantir. This is a lotto trade. I am long Palantir. This is a lotto trade in the Trinity trade, and this looks to be like a new bull market. I mean, you corrected for pretty much what, 9 months? 9 months, right? So, yeah, I mean, one second here. So Palantir looks really good. This follows the software trade that we were pounding the table on, and that's what we wanted to see. Microsoft exploded. Palantir followed it. You got software just absolutely going ballistic. Okay, this is what needed to happen. The reason why is because you need to see broader participation in the tech sector. Everyone said software is done. AI is destroying it. Okay, it's hysterical. I showed you the magazine cover from The Economist or whatever it was. We've seen this story play out time and time again. You need to hone your pattern recognition skills in this business. Okay. Pattern recognition, this is what separates, the goods from the greats. The goods from the greats. So, yeah, yeah, yeah. One second, I'm just responding to Don there. So what is my target on Palantir? In time, Rosario, I actually think Palantir can go to 280. I have a very steep target. I mean, that's not necessarily my target. That's not necessarily my target near term, right? I mean, it just depends. Depends. You built out this huge, beautiful base. I mean, 270, 280, I don't think it's outside the realm of possibility. So it looks fantastic. It looks fantastic. So I like what I'm seeing there. Today we have SpaceX earnings. Okay, is this the next one to explode higher to the upside? Just remember 2 weeks ago when you had Tesla and Google's earnings. It was, oh, everything's awful. It's terrible. Be super afraid. Apple's earnings were bad. Okay, but it's all rotation taking place. The names that have ripped higher to the upside, okay, they're going sideways. AMD, I'm not actively trading AMD, but chips are actually up nicely today. It's pretty remarkable to see it like this. I don't have a big position in chips because I like to see them go sideways. Dell just hit a new all-time high. Intel, okay, there's some opportunities there. We're gonna be looking at some tech stocks and precious metals. Yeah, ERJ Viking. I'm starting to really warm up to precious metals. I think the interventions to get the dollar back down lower is a tailwind for precious metals. And now we're kind of out of that period of macro risk in terms of the Fed, in terms of all that other stuff geopolitically. I mean, I'm warming up a lot more to precious metals, so we'll shop some ideas on that and in tech at the moment. Best performing sector again last week was consumer discretionary, but so far this week it's tech. It's not even close. This is exactly what you wanted to see. This is textbook. But put it in a museum. Put it in a freaking museum, guys. Hang it on the wall. This is exactly how markets behave coming out of lows. And I've been here long enough at TheoTRADE where we've talked through this. We've walked through this numerous times already. Tech leads early. It stalls out midway. It underperforms late. Okay, there are certain sectors that will do better. at various stages of the cycle. So we're seeing that play out once again. Okay, so we're going to come back to stocks. I do want to touch, well, actually I have some other things that I wanted to show you here on my deck. So we had that, the record selling in tech a couple weeks ago. Retail tech selling was never so heavy, exceeding the COVID crash lows, and institutions started buying last week again. So the dip, as Tony likes to call it, was bought. We talked about exposure for active managers pulling back significantly. People backed off. They backed off. And I need you to understand, do you realize how cheap the tech sector is? The tech sector is at levels that we have not seen when it comes to PE and valuations. We were in a bear market in 2022, guys. That's how cheap tech is. And I'm not even a fundamentals guy. I make fun of fundamental analysts all the time. Okay? Fundamentals. Because, I don't know. Maybe I just have tuned them out so much. Are there any fundamental analysts out there right now that are saying, hey, you need to be buying tech because it's cheap? Because I want to tip my hat to them. I try to be fair. So if there are fundamental analysts out there that are saying buy tech because it's literally priced at levels that we last saw during a bear market, I applaud you. Thank you. Thank you for being as objective as you possibly can. Because usually it's, the market's overvalued, we're going to crash, it's over. No. Higher highs and higher lows. Trend continuation. Okay? Trend continuation. We looked at this really amazing chart. The analog. I'm not a big analog guy, but I just cannot help but notice the parallels between now and .com. You had the Leopold low, okay? Long-term capital management blow up. That seemed to be a bit more severe. We'll see if that was it associated with this time around. And again, I don't know that the Nasdaq's going to go up 3x, 4x over the next 18 months. I don't think so. I'd like to see it maybe double, and then we can have that bear market that everyone's been waiting for. I'm going to take it 1 week at a time, 1 month at a time, 1 quarter at a time. We also, again, are in the most bullish stage of the presidential cycle with data going back to 1950. So just all things to keep in the back of your mind. The news's job is to get your eyeballs, is to get your attention. It's not to help you make money. That's our job here at TheoTRADE. Okay. So Bitcoin, still don't have the best read on crypto, but I am paying attention. You start to take out those highs from a couple weeks ago, you got some higher highs. Okay. So yeah, I mean, this is another one to watch. If that flips, precious metals. Okay, this is another one. Looking kind of interesting here. So I don't know if they're going to intervene again on behalf of Japan, talk down the dollar, but silver looking good. Miners, we're starting to turn a corner. This is looking interesting here. Okay, so I like what I'm seeing there. So I think we're almost there. So actually, I do have a trade idea for you on the mining front. So let's come up with that idea here right now. I was actually tracking this for you. Okay, so let's see. Pan American Silver. I think there's exceptional risk reward now. The upside target on this one is 70. Just a return. Okay. To the highs of before. In time, I think it'll go even higher. So can we I have that alert set up, 45. That's a bit wide for my liking. Probably can just put it at this low right here. 40.76. Is that enough? 76. Yeah, that's good enough. So 40.76. Okay. So here's an idea for you. That's stuff to build out some exposure to precious metals. So buy PAAS at current price levels with a stop loss on a close below 40.76, target 70 to capture gains. Okay, so PAAS, the latest idea. Yeah, Frankie, we can take a look at the because actually, you know what? I kind of want to drop PBF. I think that one is probably I don't know if I want anything to do with oil at this point. Okay, so let's go ahead and run through those real quick. And again, you know, you have a situation where spot silver is outperforming spot gold, but you also have gold miners outperforming gold spot, and you have silver miners outperforming silver spot. That's a really good sign. Starting from the top, biotech having a decent day. Okay, we wanted to see that. Relay Therapeutics, that one held up wonderfully throughout the volatility, showcasing its relative strength. That looks solid. Red Rock Resorts, was that earnings today? Yeah. Wait, no, that's today. Yeah, earnings today on Red Rock Resorts. I think that looks strong. Consumer discretionary, that was a strong sector last week. Etsy, nice bid here, looking good. PBF, I think we're done with this. I think we're done with this. So let's close out the PBF trade. We're gonna shut that down here. Modest gain, nothing too exciting. Okay, so sell PBF if you own. Okay, so came out of that one with the 15% gain. Nothing too crazy, but you know, whatever. Salesforce, this is looking better and better. Okay, we bought this one near the lows on the dip. We talked about its support. We, you know, incorporated some cyclical factors into this trade. And software, I mean, I think this is just a big sector going forward, guys. You have earnings for this one coming up in September, and you know, you start to get above 208, 210 here. I don't see what's stopping it from going back to 270. You get up to 270, you know, what's stopping it from going back to 360? So I expect this to be a trade that I'm going to be holding for a while. I do own Salesforce, just so you know. I always want you guys to know which ones that I own when we do. Sionna Therapeutics hitting a new high. Okay, so that's looking very good. You could probably tighten up the stop loss on this one. Let's tighten that up to a close below 41.64. Okay, so let's see, 41.64. Update that here. Sionna 41.64. Let me actually, let's see. Raise stops on Scion to a close below 41.64. Actually, on CRM, I think we could raise the stop some. Let me see. Let me see. What do we have to stop on CRM? 156.66. That's all right for now. Let's see if we can take out this high, and then we'll need to tighten up the stops quite a bit. Ring Central. Okay, new high there. That looks good. Not ready to raise the stop yet, but that does look solid. Expedia.com hit a new high last week. You got earnings tomorrow. Looks very bullish. No need to touch the stop yet. Still young. CrowdStrike looks ready for new highs. No need to touch the stop there yet. Still young. Robinhood, this was an idea that we shared yesterday. We bought with good risk reward as it was touching support. A little bit of follow through there, and then that's that. So I'll go ahead and publish these two updates. So getting out of PBF and raising stops on Sionna Therapeutics. So, you know, biotech is looking pretty good. Uranium's trying to come back to life. I'm paying close attention to that. Quantum, I mean, a lot of these charts just need some repair. I don't really feel the best about taking swings on these just yet. But anyways, let me check back in on the markets here. VIX, you know, yeah, VIX is not really breaking down. I think it's just because we're rallying so far so fast. Wow, S&P, that's crazy. It's been a while since we've had these big up days. Nasdaq's 200 points away from 30,000. A little bit more than 200 points away from hitting 30,000. So that's bullish, guys. That is bullish. What I'd like to do now is actually scan the tech sector. I want to scan tech. By the way, we didn't look at the Russell today. The Russell, okay, you're about to close at its highest level in history. It's getting close to that. But let's take a look at tech because we know that tech loves to, I don't know what this stock is, but it just came up. It's not even screening well. Sharon AI Holdings. I don't know how that even came up. Kind of interesting. 58.79. Huh. Okay, well, we'll keep an eye on that. Okay, so yeah, we got that idea in Pan American Silver that we shared. Let's see, anything new here? Oh, let me check my alerts. I told you I have to use my phone because thinkorswim thinkorswim doesn't save the alerts if my desktop goes dormant. So let's see. Anything today? Oh, it's Credo Technology. That's been that doesn't look bad. Actually, that could be a trade. Let's see, you're up around 10% today. I mean, in theory, you really shouldn't close this gap. You really shouldn't. Obviously that stop loss from end of July is way too far away. But if this is a true like bullish breakaway gap, right? You're gapping up, you're clearing the previous high, you're closing above it. You have this descending channel that you're breaking out from here. Okay, continuation pattern. You came back down, retested former resistance, turned support of a bigger pattern. This does look pretty good. We'll come back to that. That might be another idea. I want to try and find another idea for you here today. We got a few minutes to go. Porch.com might be Credo. Porch.com actually looks pretty darn good here. Wow. Yeah, that does look good. You know what? This might be the trade here. I got a target of 26 on this one. Okay, I think we found it, guys. Okay, so can we get that there? 1505. It's a bit tighter than I would like, but that's the best that we can swing here. Okay, so Porch.com is the other trade that we're going to go with today. So buy PRCH at current price levels with a stop loss on a close below 1505. Target 26 to capture gains. Okay, so you got a couple ideas today, but that's the market environment that we're in. You don't want to be chasing names that have already moved. You want to chase names, not chase names. You want to position yourself in names that still have good risk reward and are breaking above key levels. Okay. And that's exactly what Porch.com is doing. We know that software is back in business. So that looks good. That looks good. I like what I'm seeing on that front. We are just relentlessly bidding. It's making me think of an old company, American Superconductor. We had an absolutely monster trade on this last year, but that has not done very well lately. I don't want to touch it. Right here. Yeah, we are just like I don't know what is happening right now, guys, but this is pretty amazing. And it just goes to show the importance of positioning above the noise. And what's crazy is that, just to talk the Nasdaq real quick, if you want to call this, a broadening bottom, okay, you can see that we had that one we broke out from last week. Okay, that was the initial trade. I said 29,000. We've already hit that objective. This other one we're breaking out from, this would say the Nasdaq is set to go to 30,500. No, I'm sorry. 31,500. 31,500, which would be a new all-time high. Okay. So that is the wedge that you broke out from there. If you want to make it even bigger, if you want to apply the wedge, here. Oh, want to apply the wedge here, this would say that the Nasdaq could get as high as, let's see, 27.2, 30,000. I mean, that's saying Nasdaq 33,000, right? Is my math right? No, it's not. 32,700. 32,700, 32,800. Wow. Wow. And then if you really want to get crazy, if you want to take this low, 27,002, I should say 27,300, 31,000 basically. Okay. So let's see. Yeah. Okay. So that basically says 32,500, 33,000. That's the target on the Nasdaq. And honestly, I think that would be the high of the year. I do. I think that would be the Nasdaq's high for the year. Okay. So that's how you use patterns to deduce price objectives. So let me clean this one up because we clearly don't have that triangle there, but you do have this wedge. So you know what they say, guys, from false moves come fast moves. Well, how do you have the idea that a false move is playing out? Well, you need to observe time. You need to observe time. And that's what we do. That's what we do. So good session here today. I got to get ready to turn it over to the break. We're going to be having a 30-minute break here, and then Tony's going to be coming in. Let me just check, make sure he's playing tunes. But good session, guys. We had a couple trade ideas. We found nice risk reward in Pan American Silver. We saw nice risk reward in Porch Group, Porch.com. Software name. We know software is where the money is flowing into within tech. I mean, you can't even say it's flowing out of chips. But good session today, guys. Appreciate you joining me live. I am going to be live again today with the Trinity Trade crew. Got a lot to discuss over there. I've been positioned pretty nicely in light of the recent developments in the market. So got to be talking shop. They're going to be live there at 2:30 p.m. Eastern. But yeah, Tony's on here. He's going to be playing some music for you guys. We talked about the importance of the yield curve. We looked at credit spreads narrowing, showing strong liquidity levels. We discussed the potential for oil to collapse further. 45.55. If you think I'm nuts for saying that, good. That's how I want you to see me. And then we looked at tech. Some good opportunities there. So good stuff today, everyone. That's going to do it for today's session. I'm going to make Tony the host. He's going to put some music on for you, and he's going to be joining you in about 30 minutes. Thanks again, everyone. Enjoy the rest of your day.
Appreciate it, Gianni.
All right, made you the host.
One second here, you guys.
Thought the leaden winter would bring you down forever, but you rode upon a steamer to the violence of the sun.